HIMS is up 100% in the last 2 months, and I'm going to explain exactly why it still has more room to run. I'm also going to be going over what happened in the stock market last week and what you should expect coming up next week with all the tech earnings coming up. And I'm also going to be going over my $100,000 challenge, week 47. Let's get into it. All right, so here we go. If you can, please give me a like and subscribe. I really appreciate it. I'm going to be going over why HIMS is still a buy, the stock market news, and the $100,000 challenge, week 47. So HIMS is still a buy in my book. It's at around $30. This is April 26th. It went up 8% on Friday. So why would I think, a stock that's up 111% in 56 days, why would I think that it has more room to run exactly, right? Well, because it's still down 51% in 191 days, right? So just because it went up 100% does not mean it still has any, though this is the top. This is by far away from the top. It was at 60 and it went all the way down to 14. It was in the 14. So has a lot more room to run. I think eventually it will hit all-time highs, which is actually 70, 72 maybe. So, that's in the future, but we're talking at least 100% from here. So I do believe it has more room to run, but why, right? The stock's not just going to run for no reason, right? So I'm going to explain exactly why I think it's going to go. Basically, the number one reason why I think it's going to have the biggest boost in the next 12 to 18 months. First, I'm going to go over, as you can see, the forward PE and the short interest, right? The forward PE is at 51 and the short interest is at 32%. So it's, has a kind of a high valuation, but it is a growth stock. As you can see, 32% shorted, 71 million shares short. And then also 75, this is according to Robinhood, about the same percentage, right? But people are calling peptides the future of healthcare, and HIMS is getting really into peptides. The FDA just came out about, legalizing or, having to reassess and, possibly reclassify some of the peptides. So listen to the CEO, Andrew Dunham, and he talks about where HIMS is going to be in terms of peptides.
We launched GLP-1s. And everyone said, oh, now you're just a weight loss business. And, a year from now, people will say, oh, you're just like a peptides business, probably, if I were to take a guess.
I mean, he's basically admitting that they are going to be a peptides business, right? Because if this is what their main push has been over the last 12 to 18 months, is the GLP-1 weight loss, and people see it as that, then they're probably going to be pushing the peptides in the next 12 to 18 months, and they might be seen as a peptides company. So why are peptides the future? So they occupy a middle ground in medicine, right? They have precision targeting, so they mimic natural signaling molecules, and they have very few side effects, lower toxicity, and faster development. They are often easier and cheaper to design and produce over the large protein biologics. So one of the number one reasons is the oral delivery, the holy grail. When you can take a pill, for it, and rather than getting injections, because really peptides mainly are injections. Once we start getting the pills, it's going to be absolutely amazing, and they're already starting to create those and have those available. But they also help with neurodegenerative diseases like Parkinson's and Alzheimer's, right? They have a big possibility and potential to help people with Parkinson's and Alzheimer's, which have been previously called untreatable conditions. And then they also have, if you've heard of superbugs, where all these viruses that are basically becoming resistant to all of our medicine, these peptides are basically, they disrupt the bacterial membranes, making it much harder for bacteria to develop resistance. So they're just going to be able to help out with these superbugs that have actually become resistant to our medicine. And then, of course, AI, which is making everything better. It can reduce drug discovery timelines from years to months. So what you used to have to wait 2, 3, 4 years, now you can find 2, 3, 4 months. And customization, it allows for personalized peptides tailored to an individual specific genetic markers, which, if you know anything about HIMS, that's exactly what they're doing, what they're trying to get into. So that's very good. And if you look at the last year, this is in Google Trends, clearly the trend has been a lot more searches for peptides. In the last 5 years, a lot more searches for peptides. And the last since 2004 to present, as you can see, it's so much more recently. Now, can this go down a little bit? Of course, but people are becoming a lot more interested in peptides because it's kind of a health phenomenon and it's working. It's working. And if people are having good health side effects from it, they're going to be, looking into peptides. So I do believe Hims is still a buy. There's also plenty more to go with the business and the numbers and the financials. Their net income wasn't great because they've done a lot of investing. They bought a peptides business. They bought other businesses to expand international. They've been doing a lot. So I just did the blood test at home, so I've had some good experience with it as well. So I do believe Hims is still a buy. And so now I'm going to get to the stock market update. What's been going on in the stock market? The S&P 500 is up 13% in the last 25 days. The Nasdaq's up 19% in the last 25 days. Oh, I don't know if you can see. Yeah, you can still see that, right? There we go. That's the Nasdaq. And then this is the Dow Jones is up 9% in 25 days. This is the stock heat map. As you can see, tech has been doing pretty well. Finance not so well. They did earnings. Producer manufacturing doing well. Health technology not doing so well, except for Hims basically. And then consumer services has been down. But it's a lot of mixed baggage, right? You just got certain departments, certain sectors doing well over the other ones. As you can see, the AAII Sentiment Survey, we're now heavily bullish. We're over our historical average, right? We completely went from under the historical average to now well over the historical average, but we still haven't reached the 1-year high. The 1-year high was 49%. We're at 46. So, we still have room to get more bullish, but we are kind of hitting that peak already, and we got there quick. We jumped 14.3%, right? We lost a lot of the neutrals and we lost some of the bears. The bears, we lost 8%. We lost about, 16% from the neutral. Everyone just jumped over into the bulls, basically. And as you can see, though, look at the neutral, right? The neutral's gone down. It went from 25 all the way to 19. The historical average is 31. So we are still very low. People you're either bullish or you're bearish. It's one or the other. Historical average is 31, and we're still above our average in bull or bear. So we're above the average on both of those, on both bull and bear. So it's just kind of interesting. We are greedy right now. Previous close, 66. A week ago, 67. About a month ago, we're extreme fear. And a year ago, extreme fear. The stock market is very emotional. And I'll go over a little bit more of why it's emotional. So last week's news, we had the Middle East conflict and oil price volatility, ceasefire extensions. There's been more extensions to the ceasefire, but who knows exactly how much that's really going to happen. We have the Strait reopening, and Brent crude falling below $100 per barrel, and then direct peace talks. So we do have some more, going and more momentum going on the peace talks and ceasefire. But again, let's see exactly how far that can go. Oil is still up, though, 48% in 59 days, right? Oil is still up 48% in 59 days. And at this level, I don't think it's good for the economy. I do think it has to go down eventually. But as you can see, oil went up 974%. Now, again, it was really low. This is from COVID, right? But it went up 974%, and S&P 500 went up 75%. Oil went down negative 54% from middle of 2022 all the way down to 2026. It went down 54%, and the S&P 500 went up 65%. So S&P 500 went up 70%, and it went up 65%. Oil went up 900. Oil went down 50. Essentially, the stock market's going to do what it's going to do. Yes, oil is up. Oil is up, and the stock market went down a little bit, and then now it's back up. The stock market is now going to kind of look a little bit past the oil price probably from here, but I do not think it can stay elevated at these levels. I do think it has to start making a move down in order for it to make progress with the stock market. Number two, we also have high growth tech and AI earnings last week. We had the chip sector surge. Intel announced their earnings and it went up 24%, and AMD surged 14%, even though they didn't announce any earnings. Then we have big tech investments. Google, they said they can invest $40 billion in the Anthropic, and then more AI demand. There's just more international markets, particularly South Korea. Kospi were also boosted by strong earnings from chip suppliers. So it's just more to the AI section, right? So we have Intel, AMD both going up 23% on the week. And then lastly, for last week was Federal Reserve and economic indicators. Stable yields, the 10-year Treasury has been just stabilized. Powell probe resolution. The market uncertainty was reduced following news that the DOJ ended its criminal investigation into Jerome Powell. And then there's been mixed data. While the labor market remained historically healthy, preliminary reports suggest U.S. business output was beginning to improve after a stagnant March. So it's kind of just a mixed bag of stuff. Nothing great, nothing, bad really. What can we expect next week? So we had the Federal Reserve meeting and Powell's tone. So the rate decision, we're going to have a decision on the rate. Markets widely expect them to hold the Fed's rate steadily at 3.5 to 3.75. Powell's final stand. This may be his final meeting as chair before his term ends on May 15th. And investors will scrutinize his tone. And then, of course, talk about the oil-driven inflation shock. And then transition uncertainty with the Department of Justice recently closing the investigation. Now it's going to focus on the transition into Kevin Warsh. We have peak Magnificent 7 earnings. We got a lot of big earnings coming out. We have Microsoft, Amazon, Google, Meta, all those, and then Apple all going to, announce their earnings. And then AI expectations, of course. Following massive gains this month, investors will look for concrete evidence that AI investments are translating into significant revenue growth. So if we're not seeing anything revenue growth or anything that's helping the revenue and earnings from AI, investors might start turning negative. And then we also have, of course, the Middle East geopolitics, right? And inflation data, energy impact. How much, is all this stuff? Is the Strait still going to be up? Is it still going to be open? Whereas oil price is going to be PCE price index on Thursday, April 30th. The U.S. will release the March the PCE report, the Fed's preferred inflation gauge, and then the GDP growth. The first estimates of the Q1 GDP will also be due Thursday, and expectations are 2.1 growth. So we have a lot of earnings, like I said. We can start off over here on Tuesday where we have Seagate. I mean, you can also talk about, Coca-Cola and Robinhood and stuff like that, but I'm talking like the big ones that people are really going to be focused on a lot. I kind of look at Spotify as well. But we have Seagate, Microsoft, Amazon, Meta, Alphabet, Chipotle, SanDisk, Apple, Western Digital, all these big players. You can even look at a Reddit and a Chevron, right? That's oil, right? We're looking. So next week, big week on earnings. Now, my $100,000 stock market challenge, this is week 47. I am now at $9,247, which has been it was up 4.5% just on Friday. I went up 3.29%. I am still just a little over 17% behind what I want, the goal, basically, which is 11.2 thousand. I'm at 9.2. My portfolio is up 25% though since June 2nd, 2025 is when I started this challenge. But if I take away all the deposits that I did, I'm actually down 11.64%. So this is why deposits matter so much. If I never made those deposits, this account would actually be less than 7,354, but I've been putting in money. And yes, some of those investments have gone down a little bit. To a degree. When I started this account, HIMS was at like 52. And I already knew that was going to mess with the calculations, but I just said I wanted to start a challenge regardless. And so I did it. And so, yeah. And a few other ones have gone down, of course, because of this, the kind of correction that's happened. And I bought some SaaS companies that have not yet, come back. But that being said, I'm okay with where I'm at because I do believe I'm going to reach a good amount here soon. So the 1 week performances, I have HIMS, TQQQ, Meta, Celsius, and Amazon as my top 5. Then to round it out is Adobe, Nike, Salesforce, The Trade Desk, Oddity, Micron, and Google. So I have Micron and Google kind of at the very bottom. I'm going to start putting more into Google. I believe in Waymo. I actually took my first Waymo this week, and I want to do a full video about Waymo. It was pretty awesome. It was really awesome, and I do believe that that's the future. I was with my kids, we were going to the mall, and I saw 2 young girls get out. I don't know, they're probably like 14 to 15, something like that, by themselves, got out of the Waymo. And I told my daughter, who's 11, I said, when you're old enough to need to go to the mall or go somewhere with a friend, I would way rather have you go in a Waymo than be with another driver. Even though there are certain situations, of course, that a Waymo might not be able to get through, my daughter would be able to have a phone, get out of the Waymo, call me, something can happen, right? It would be, the reason why she'd have to call me from a Waymo is a lot better than what she'd have to call me from an Uber or Lyft. So that being said, I believe a lot in Waymo. I believe Google is going to be able to profit a lot more than what we just think of the rides. There's going to be a lot more to it. So as you can see, that's my new position, is Google. And I'm going to keep adding to that. And I sold Hesai. It's a Chinese company for LiDAR. And like I said, you know what? I'm going to just start investing into Google for that. If I believe in this LiDAR and I believe in how it's going to be moving with automated driving, I'm just going to go with Google and Waymo, even though I do believe Hesai will be a great company to invest long term. I was getting charged, it was very little. I got charged 20 cents or something like that to hold on to them. But I was just like, I don't remember, why would I be charged for that? I don't know. I didn't understand that, probably because it's an international company. And so I said, you know what, I'm going to sell those and get into Google. And then, of course, I bought some Salesforce and then I put $50 in. So all in all, in total, with my selling, my buying, and my deposits, I'm up $128 on the week just in terms of that. So thank you for watching. I really appreciate it. If you can, please give me a like and subscribe. Yeah, that's kind of, what's happened in the stock market, why I think HIMS. I mean, I do believe HIMS has a long ways to go from here. It's at $30. I did the blood test and it seemed great. It was very easy and convenient. There's also a few things that I don't like about it, whether from the app and there's a few things that I have. So I'm going to make a full video about how the HIMS blood tests work and all that. So yeah, that's my video for the week, my stock weekly update. And thank you for watching. Never forget to be aware and prepared, so then you're not scared, because stock market crashes happen, stock market corrections will happen, and if you're aware and prepared, you won't be scared and you'll be able to buy those dips. So yeah, anyway, never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.